Hi, Chris. Welcome to the podcast. It's a pleasure to have you here. How are you today?
Hi, Michaela. I'm great. Happy to be here with you and your listeners.
Nice, nice. Do you want to give us a brief explanation and brief introduction of your background, of course, and of BMK as a company?
Sure, definitely. I'll start with a bit of a personal background. Uh,
Mhm.
I actually started my career in banking on the TradFi side. Spent a bunch of time
Mm,
on different trading desks at different banks, but most of the time was actually spent on an FX desk at BNP Paribas, the French bank, and
mm,
I was doing some MiCA FX trading, so all the weird and wonderful currencies you would have heard of. And that was kind of my introduction to payments, really. I was doing kind of spot FX, which, as if you know anything about payments, you'd be able to execute a trade in a millisecond. But when you were trying to settle exotic currencies, you would, get into this
mm,
long delayed settlement times. And that's kind of my first look under the hood at payments infrastructure and kind of how it didn't really work too well. And got a little bit obsessed with that and effectively left banking. I'm originally South African, so kind of moved to
mhm,
Cape Town and set up a small little hedge fund in 2016, 17. And that was my introduction to crypto. I'd been on the desk,
mhm.
spending a lot of time, seeing Bitcoin pop up on the desk in 2014. Didn't give it much notice. Should have, but
Unfortunately, I would
effectively,
say.
unfortunately, but did take the plunge in 2016 and went down the rabbit hole. We have very much early approached crypto with my partner as a
Mhm,
new asset class to invest in. And but I quickly found through the trading strategies we were implementing in the fund, which was cross exchange arbitrage. I became
mhm,
an early user of stablecoins, really, as I was moving money between exchanges. This was, mind you, a stablecoin market cap was sub a billion. Tether was the only game in town, really. Um,
mhm,
and kind of got, dusted off those kind of settlement or payments infrastructure obsession when I was at the bank to kind of say, hey, this is a new technology that could probably be used to do, settlements in this kind of
mhm.
payments world. Um, Fast forward a year or two, hedge fund didn't really work, but learned a bunch. Ended up meeting my co-founders Jesse and Don at BVNK through my ex-business partner, and we've been building out BVNK for the last 5 years. And yeah, a quick introduction on BVNK. We are the leading stablecoin payments infrastructure provider globally. We really help, enterprise companies integrate stablecoins into their payment stack, making fiat and stablecoin payments interoperable. Almost sometimes I say making blockchain payments as easy as bank payments, effectively. So yeah, we enable businesses to send, receive, convert, and store stablecoins and fiat currency seamlessly, as well as enable different stablecoin use cases across pay-ins, payouts, settlements.
So before jumping directly to the company itself and to your experience, I wanted to focus on the first part of your experience. Coming from a trading desk in a very structured bank, I would say, to the hedge fund ecosystem, let's say to the fund ecosystem, and then to a startup. How
Yeah.
was that kind of passage, that kind of transformation over time?
Yeah, it was super interesting. I mean, in South Africa, and I'm originally South African, grew up out here, but I've been living offshore the last 5, 6 years. But in South Africa,
Mm,
the market's quite small, and
mhm,
you also don't have exposure to the things that you would have like startups. It's not a
mm,
Silicon Valley. People don't go to even in
yeah.
London. It's when people from South Africa, given it was a British colony at some point, to have a general connection to the UK, we all think, hey, we want to go work in banking in the UK. That's kind of the
Mhm,
path you take. It's not like, hey, I want to go start a business at 18
yeah.
and see what I can do. So I think maybe I like to speculate that if I was in a different market and grew up in a different place, maybe I would have started a business earlier or kind of,
Mm,
not done the traditional route. That being said, I think it was crucially important to me, specifically for what we're doing now, is like building better payments
mm,
technology, um, using the blockchain. But yeah, those formative years on a bank trading desk were super regimented. You work long hours. But I think
mm,
the core thing I really took away from that was that, payment systems didn't really work too well. And then managed to stumble upon, um, crypto through, like I said, through the fund side, i.e. approaching it very much as a way to invest. I done
mhm,
the kind of CFA route, traditional finance background at university. So like investing and trading were kind of the two things that I
mhm,
didn't really know startups. Um, but yeah, so that was kind of like South Africa. And then to be honest, moving to London, I spent some time in Singapore after that, and then spending more time in Dubai more recently, and actually at the moment spending more and more time in San Francisco. I think that the one big thing that you realize is just the scale of difference in
Mm.
markets. So, you come from South
Yeah.
Africa, you go to the UK, it's 100x in size in terms of like how big your business can be, the size of the things you can do, the caliber of people that you're dealing with. And then you go from London to the US and it's like another 100x
Mm.
jump, basically,
Another jump. Yeah, yeah, yeah.
Exactly. So that's been probably the most exciting part of the journey is kind of testing
Mm.
yourself, personally and professionally on the largest stages in the world.
Mm.
Um,
Yeah, this is a conversation that I had multiple times recently. I understand from one point of view that, coming from a market like South Africa, but like Italy also, as I do, or like Spain or other market in Europe, it's kind of limiting on one side, but at the same time, it's kind of give you that multicultural background of having, different culture behind you, different experiences, being a little bit here and there, that give you that kind of edge to actually start a company or to actually start a business. And I think it's a kind of an advantage. Always being in San Francisco or always being in the US, in my opinion, is limiting the kind of possibility that you have, even if you have a huge capital market available at your
no, I
disposal. But
think 100%. I mean, my wife is French. I met her while I was working in the
mm,
bank, and I've lived in 5 or 6 different countries. I
mm,
think, and you spot on there. I mean, I'll use an example based on, South African, as coming from a South Africa, coming from South Africa, you acutely understand
mm,
stable coins, basically. Like,
yeah,
okay, I can get access to dollars. There's no capital controls on that. So, I acutely understood early on, same as some guys in Nigeria and Argentina and Southeast Asia, why this makes sense. That's not,
yeah,
even today, probably it's not, obvious to a US user that's got a domestic payment system that works. They already get the US dollar. So I think,
mhm,
as you say, growing up in different environments, and in a multicultural space, it helps you build teams better. It helps you understand
yeah,
problems, see problems, I guess, more clearly than you would if you were in, as you say, in just growing up in one market and only ever doing anything in that market. So no, I 100% agree with you. It definitely builds character
mhm,
and tees you up for, yeah, for kind of scaling a global team post COVID. I think,
yeah.
we definitely scaled through COVID. I think we've got 42 nationalities in the business today, which, we're quite proud of. So it's quite
Yeah,
exciting.
I can understand. Yeah, and let's jump back to the industry itself. The first time you said that the first time that you saw basically crypto was behind a trading desk. So at first, I wanted to understand. Let's say the first opinion that you had on that matter on that topic. It was, it's just an opportunity for an investment, or we can actually really build something on it. Like the first thought that you had on it.
First time. I mean, I'll never forget. I got a Bloomberg pop up. It was probably 2014. On those Bloomberg screens with
Mm,
all the stuff coming through. Something about Bitcoin hits $1,000, I think, which was something like that. And we had a debate on the desk because we were working on an efforts desk at the time. And to be honest, I was super intrigued by it, but I had an
mm.
MD on the desk that was like, "Oh, this is all smoke and mirrors. This makes no sense." And I probably was influenced by him in hindsight.
Makes
And
sense.
then that's why it took me another, I guess, 18 months to actually start scratching the surface. And I do credit my ex business partner at the fund, and he was a fund manager, and he started going deep down the rabbit hole in 2015, and
Mm.
it took him about 8 or 9 months to convince me to actually go focus on it properly, and that was kind of into 2016. So I would love to say I saw it and it was like a light bulb moment right away, but I'd be lying. But once you get under the hood and read and I'd read the Bitcoin white paper, and it's
Mm.
actually here on the wall in the office, but right in there it says peer-to-peer electronic cash. That was Satoshi's
Mm.
original vision. And if and that kind of sparked the kind of going down. And then but I do think if you were schooled like in Austrian economics and you didn't spend your time learning Keynesian economics, which I know they teach,
Mm.
mainly teach at universities in South Africa versus,
Mm.
sometimes some in Europe, do go down the Austrian route, that would have probably hit you like a ton of bricks in the face, going like, this is
Yeah.
this is hard money asset that we should go look at and explore. But yeah, that was not my pathway to it, but I think it was early enough. Um, so, can't complain.
Yeah, no, no, absolutely. I think I had more or less the same thought. First of all, it's kind of easy to get, distracted or influenced by, someone else that you're working for about those kind of things. So it's kind of easy to fall for the trap in the beginning. But then over time, I let's say I switched also to the kind of technology side of this matter. Trying to understand how the technology can help people and businesses to actually move money around, and that is kind of pretty interesting. Everything else that is built on top of it, like the investment side, the profitability side, the opportunity, let's say, that is coming with it. It's something that is speculative in my opinion, but everything else, the technology itself, is really helping people, to solve problems. And I think that is one of the main things that you're trying to build with BVNK. So you're trying to help people to move money around in countries where it's kind of difficult to do that.
100%. Yeah, definitely.
Yeah. And let's go back to the stablecoin market more specifically. So I just came back from Money 2020, and I think that was one of the main trends that we saw in the event. You guys have a very big stand on it, and I wanted to have your, let's say, opinion on the current trend that is going in the industry about stablecoin. So we are seeing stablecoin for payments. We are still seeing stablecoin for cross-border payments more specifically. Where is this industry going in your opinion at the moment?
No, look, I think it's definitely, we're seeing accelerating growth across our business, across, volume, across use cases. But I think um, crucially really starting to see the enterprise level PSPs and merchants starting to move. So, we would have, at Money 2020, we did an announcement with Lian Global. They're effectively the world pay of Asia. The week before at Stablecoin, we did some PR with WorldPay where we're launching stablecoin payouts for WorldPay. So you really are seeing an accelerating pace. And I'll explain, that's very different to what we did, what we saw when we started. And I'll give you a bit about that journey and then the conversations I've been having and then, where I think it goes. So, we started this business, 5-6 years ago in its current form. Our original use case that we enabled was actually cross-border payments using stablecoins as the payment rail. So you would have heard the stablecoin sandwich terminology. That was the first product we launched, actually. We would collect in Southeast Asia, we would collect in Africa, we would get into stablecoins, we'd move the money on the blockchain, we'd settle the merchants in Europe, in euros and GBP. And the merchant would never know, didn't care that it was stablecoins underneath it. All they knew that we were solving a problem for them, faster settlements out of markets that they were struggling with. The problem with that was we quickly realized, look, we had some early success, but we quickly realized you couldn't actually get to mega scale because of a couple of things. You didn't have API first liquidity or infrastructure. You had regulations where, there weren't any regs even in Europe and the UK, let alone in any of these emerging markets. So, there was a bit of a regulatory void, so to speak. So you couldn't actually build a really scalable product at that point in time. That has now completely shifted, obviously, and you're seeing this renaissance of the stablecoin sandwich use case come up again, and we obviously serve those today. But what we saw was stablecoin. Then as we moved away from the kind of stablecoin sandwich, we realized, look, we believe this is an infrastructure upgrade to payments. What does the world need to look like, and what do we need to build for to enable that future? So firstly, we knew we needed to get as regulated as possible on both the fiat as well as the crypto asset side. And given there weren't any crypto asset regulations back then, we went down and got heavily regulated on the fiat side first. So we got an EMI license in the UK, an EMI license in Europe. We've got 50, state MT, 22 today, but 50 state MTL applications in as we expand in the US. And we also have crypto asset licenses in those markets. So we very much kind of took a compliance first approach. Generally not the sexiest approach to be building in fintech, taking a compliance first approach. But 3 years ago, there were no frameworks. We needed to kind of do something to get that credibility on top of the technology. So we did that. And then we also launched stablecoin payments infrastructure for, fintechs and PSPs, which was really a flavor of pay in. So you want to build a stablecoin checkout, you can use our APIs to do that. And we have some of the largest merchants in Europe in certain verticals using that. We launched following pay-ins, we launched payouts. So this was where we launched with customers like Deal, the global payroll platform. We launched and do stablecoin payouts for them into 85 markets around the world. But crucially, as we were doing all of that, stablecoins was getting momentum. We crossed 100 billion in market cap. We started seeing, payments use cases going a little bit more mainstream. Crucially, over the last 12 months, I would say regulation has gone from a headwind to a tailwind, specifically in the US.
Yeah.
You've had, some big moves by companies like Stripe on the acquisition front. But then crucially for us, we were having conversations with enterprise level PSPs 2 years ago. Those conversations were like, hey guys, we know you do some of the stablecoin stuff. Like, just tell me like what I should be thinking about, what use cases make sense, what are merchants asking about. And, so maybe you would have gotten to a kind of a POC. Fast forward 2 years, those PSPs are now going live with serious intent and, just rolling this out across their merchant base. And you'll see more and more announcements from us coming out. So I think that's really shifted, quite aggressively. You've got, momentum in the market. Payments has really, floated to the top use case, multiple different, underlying sub use cases from that. Regulatory shifts that are now tailwinds versus headwinds. And then also, a few key things, happening in the market in terms of, validation, including some of these acquisitions and that sort of thing. So, we are all systems go. The market's, growing significantly. We're growing significantly, and it's an exciting time to be, arguably the leader in the space. In a market that now, we've been building in. We've been building for this future for 5 years, and it feels good to finally have the market kind of come to you a little bit, and not have to explain what a stable coin is.
Finally arrived in the end, so
exactly.
it's kind of nice to see that. But
exactly.
The regulation topic, in my opinion, is very, very interesting because, as you said, you were building in this market, be compliance first when the regulation wasn't there, basically. And I think that still right now, because I'm working with a couple of startups that are trying to do the same in African countries, for example. It's still the same scenarios, So they want to start building something, but the regulation just isn't there, and they need to find those kind of gray area when they can actually innovate and they can actually bring value without being, illegal or without doing anything that is not allowed. So it's kind of hard in the first phase. And how did you actually do that when the regulation wasn't actually there? To try to bring value to your customers.
Yeah, so we very much built as if regulation existed, and we based it off existing payments regulations. So we had this view that look, if stablecoin payments are just payments with another underlying payments technology that is actually just better, we know what to do in payments. You know how to screen, you know how to do AML, you know how to do KYC and KYB. So we built that in directly, and then you operate, even though there's no reg, as if you were regulated as a payments company. And then when the regulations came through, it was a lot easier to kind of, didn't have to shift your whole business, but because you were already operating like that, and it made a lot of sense. So that's how kind of we did it. That being said, you do need to be building in a market that has, maybe it's not there today, but some sort of foresight at, look, we're looking at a framework, there's a sandbox and this sort of thing. You can't be building in a market that is very hostile to the actual technology itself. That becomes, rather challenging. But I think, moving on from there, obviously, MiCA in Europe, Genius Stable Act in the US, Singapore's had a great licensing regime. They just brought stablecoins underneath their existing MPI payment structure. We also have an application, and should be getting our license there quite soon. So that's what we did. We basically said, like, what would the regs look like if they did exist? They'd probably look very similar to EMI regs in Europe, let's say that. And let's put that in place today. And, we got an EMI. It forced us to be regulated that way. And then we just applied that same thinking and that same, thing to stablecoin payments.
So you were basically agnostic from a technology perspective. You just applied the same regulation as it was for cards or bank transfer or everything else. You just were agnostic about the technology itself.
Exactly, and from a compliance perspective, obviously there's a bit nuances underneath the hood on the tech, but definitely from a compliance perspective, we did KYC, KYB day one. We made sure that we used all the right tools to do transaction monitoring and screening. So, like, instead of using Refinitiv and Comply Advantage, we used chain analysis, to do our screening, obviously. And we built compliance programs around that. Same sort of things around RFIs. How do you hold payments? How do you do straight through processing? And if you use that framework, it kind of teed us up quite well to kind of quickly transition into being fully crypto compliant as well as soon as the regs came out.
Yeah. And you were mentioning the Genius Act and MiCA in Europe. And I think that that is one of the most, let's say, trending topic recently, because for a long period of time, we saw MiCA as a potential disruptor under that point of view, potentially blocking some smaller startups to innovate in this field in Europe. And then we saw the Genius Act in the US that is trying to regulate this space. So I think that I understood a little bit your position about compliance, but I wanted to get your point on the difference between the two, so between Genius and MiCA, and if you think that MiCA is actually helping in Europe or actually blocking some potential innovation cases in this country.
So I mean, crucially, I'm closer to MiCA, given we've got our application in and that sort of thing, and spent a bunch of time on it. But I think the key points was like bring it under payment regulations, bifurcate core principles. I think bifurcate crypto and stablecoins. Stablecoins are for payments, crypto are for investing, or all our commodities, this sort of thing. And then in the stablecoin space, once you kind of bifurcated that, you then needed to go. Okay, like let's make sure that whatever stablecoins that are being used are managed the right way, reserves are there. And I think, so I think, let's put it this way, in theory, everything that they put together makes sense, but there's a few things that just, maybe don't make sense, like forcing European stablecoin issuers to hold their money at a European bank instead of buying treasuries, because you add an element of counterparty risk into the, which you're trying to get out of basically, by investing in treasuries directly. So I think there were a few things that they overlooked, but I don't think any of these are let's put it this way, are detrimental to the industry. Maybe it makes it slightly a bit difficult to get started, or you want to do something more nuanced. But crucially, what it has done for us, it's changed the conversation with enterprise payment companies, enterprise merchants, who are now, because there's a MiCA framework, willing to step in, willing to add it in their checkout, willing to think about how they should be using it. Every little detail underneath the hood, did they get right? Not, but it is consultative from here. It's not like, hey, this is it now and it's done. They're going to implement, roll it out, and then take feedback from the industry. And I think that the Genius Act is doing a similar thing in the US, where we've seen a marked change, a very noticeable change in inbound, as well as very exciting conversations with local US banks. Tier 1 enterprise merchants, all going like, look, it looks like the administration is now friendly. It looks like these regulations are going to pass. Let me actually lean into this and understand what we should do. And then again, I think it will follow the same route. Get some regulation out, take some first round of feedback from the industry, tweak a bit here and there where it didn't work. But I think this is definitely not detrimental at all. In my view, to the industry, it's 100% a step in the right direction. And are they going to get everything right? Exactly. Are they going to get everything right the first time? No. But it's a significant change in willingness to engage and interact with stablecoin payments.
It's a good point, I think. I do believe that maybe some of those things are a little bit overthink, in my opinion. Like, for example, the point of having money actually in a European bank, and that amount of money, because it's a very, very high ratio at that point of view, maybe it was a little bit too much. But it also makes sense to iterate over time and maybe reassess that kind of variable over time from the regulator perspective. So we could potentially see some improvements later on during the years. Coming back anyway to the technology side, or to the customer side, I would say. So recently there are a lot of conversation about how that kind of use case evolved over time. So in the beginning, as you said, people just wanted to move money from point A to point B, and they don't really care about the rest. Right now, I think that we kind of see people wanted to have all that flow end to end, and maybe sometime also keeping the stablecoin in the end, or the crypto in the end. So how do you see that kind of use case evolving over time? Because I think that right now we are seeing a little bit of change under that point of view.
100%. I mean, it's really exciting for us because when we talk to customers, let's say we're talking about a payouts use case. This is I use Deal as an example. Deal is a global payroll platform. We pay out into 80 markets for them. Top markets are Argentina, the markets you would think. That Argentinian user doesn't want his local currency. He wants to receive a digital dollar and
Yeah.
store that digital dollar because, for multiple reasons, hedges himself against the underlying. So
Inflation
I
and
think you're
everything. Yeah,
seeing
of
more and
course.
more of those use cases permeate where they actually, because of, the global south, have a lack of access to dollars, a lack of access to a stable currency, and no way to get dollars through a bank account. This is solving that core need, and that demand is driving merchants, PSPs to think about, well, look, if my customers want this, how do I actually deliver it to them and allow them to hold on to it? And then again, the question goes, okay, what do I do with it in that local market? They hold it in their crypto wallets. They can sell it at a local exchange if they need to get their local currency. There's a lot of exchanges popping up around in these local
Yeah.
markets to serve that use case. But then crucially, they can spend it. You're seeing a lot of cards being issued over stablecoin
Yeah.
wallets. So now they get more utility at 150, whatever, thousand merchants or million merchants where Visa has, Visa is accepted. But then crucially, we see the third one being the user received the payout. They're now storing in a wallet, and now they can spend stablecoins at a checkout through,
Yeah.
our kind of checkout API. So now a user goes from living in the fiat world to living in the stablecoin world, from payout to storage to payment. And then the final piece of the puzzle is, cool, I can now earn some yield closer to akin to treasury yields on that
Yeah.
stablecoin balance. So it's almost the replatforming of all these underlying banking or financial primitives onto stablecoins. Send, receive, spend, earn,
Pay.
store.
Yeah. Yeah.
So yeah,
Yeah,
it's a
maybe
yeah.
the missing piece that I see during that kind of flow or experience, in my opinion, is the business side. So, uh, do you think that we will see also treasury and accounting done in stablecoin very soon? Because I think that right now companies are a little bit of bias under that point of view. They don't want to keep, for example, crypto or stablecoin on their books, but we are seeing more and more startup trying to propose that as a use case, having, for example, the entire flow end to end, including the bookkeeping and accounting side. So do you think that is a possible use case, or we will see more of that in the future?
100%. So we very much a B2B platform, but we serve B2B2C use cases, B2B2B
Yeah.
use cases. So we enable customers to pay invoices, in stablecoin, just normal supplier invoices, vendor payments, this sort of thing. We also allow customers to accept stablecoins by spinning up a payment link and attaching that to an invoice to allow their customer or their vendor to pay them. So we see definitely a lot of these B2B use cases. And then to your point, 2 years ago, they just wanted to get back into fiat immediately. Now they're like, hey, let me actually keep this in the treasury because there's maybe I need to pay a supplier. I received money from a Hong Kong supplier. I need to pay a supplier in Australia. I'm a US business. Maybe stablecoins is a lot easier for me. So you're starting to do that. And then exactly to your point, we were having conversations with treasurers, CFOs, and their questions always like, okay, how do I think about the risk? So I was like, guys, thinking about like another currency inside your list of currencies that you serve inside your treasury policy. Have a policy that allows how much exposure, just like you would have exposure to Naira or Argentinian peso, have your
Yeah.
exposure to stable coins. Maybe you don't keep it overnight. Maybe you're able to keep a balance overnight. Work through that. That gives you the risk management around the treasury side. And then to your point, with some of the recent accounting rule changes with keeping crypto on balance sheets and how you can account for that, mainly, Bitcoin where it's quite volatile, but it brings crypto into the accounting fold and put some accounting standards around how you report on that from a financial reporting perspective. So 100%, I think we're seeing those use cases starting to permeate. I don't think they're at scale yet, but, as we've seen, it happens slowly and then all at once. So, yeah.
Yeah, we are looking for the hockey stick under that point of view so that we can
Exactly.
ramp up very quickly. Maybe again on the consumer side, because you were mentioning also paying on that end of the flow. How do you see, payments company, or like more specifically cards company? Obviously, Visa and Mastercard are the two, obvious ones. How do you see them interacting with this kind of industry? Because we saw recently many use cases and many partnerships from both Visa and Mastercard to propose, cards and payment methods on top of stable coins. Do you see that as an enabler in this kind of industry for the consumer, of course?
Yeah, I think that there's two things that card networks are thinking through. Now, I'll obviously never speak for them, but
Of course.
Visa is actually an investor in our business. They came in as a strategic investor in Series B. And And when we chat to the people at Visa, it's really around a couple of things. It's how do we add a card on top of every stablecoin wallet in the world to give more utility to that stablecoin balance? Like we spoke earlier, hey, I can go spend on any online store, wherever Visa is accepted, but I'm spending from my stablecoin balance. And I think that is a great use case. And it definitely adds more utility to that crypto balance or that stablecoin balance. So I think that's great. And that's how card networks are, have been running a lot of these, crypto card programs and that sort of thing. But I think what's more exciting, actually, if you look underneath the hood of how card flows are settled today, so card flows go from an card issuer to the Visa treasury to the merchant acquirer, and then it gets settled to the merchant. Obviously, it starts with the user who spends on his card. That flow all happens quite disjointedly. If you're doing a cross card or a cross currency payment, you've got a USD card, you're in Europe traveling, you pay euros, there's FX involved, money needs to move around. And I think, I think the card networks are, and especially the issuers are looking at it and going, listen, and this is where you've seen Visa lean into things like this with their stablecoin settlements. They're allowing crypto.com, a card issuer, to settle them in USDC for the underlying card flow. So I think there's two ways to think about card networks and stablecoins. One is, yes, we go issue a card on top of every stablecoin wallet and allow them to spend and pull from a stablecoin balance. But I think more exciting for us, given we payments infrastructure, is how do we enable issuers to settle Visa in stablecoins? How do we enable their programs to settle them and their issuers then to unsettle Visa? And if you move that on chain, that for me is a significant unlock, because today you sit with 4 or 5 days of pre-funding as a issuer that you have to park with Visa, specifically because banks are closed on a weekend and you need to make sure that your authorization limit on card spend is replenished. We have a technology that is real-time, 24/7, always on. It's called stablecoins. You can use that, in the background as pure infrastructure to settle those flows, So that's quite exciting. And I think you've seen different flavors of that. Visa's done a couple of announcements, MasterCard's done a couple of announcements like that. But I think the underlying theme is stablecoins, payments infrastructure works really well for this global interconnected card settlement flows in the background as a new technology to do the settlements on top of.
Yeah. You made a very good point in this one, because we are saying, okay, business are already there, consumer are already there, payments method, card user are already there. When we will see banks on this kind of technology? Because you said a very good point. They are closed on the weekend. They are not processing payments on the weekend most of the time. So you need to wait those 2 days on average, I would say. When we would see those kind of institutions actually jumping in and allowing, those kind of things to be very and really instant.
Yeah, I mean, look, I'm not going to lie to you and say that, we've seen a lot of movement on the banks, over the last 6 months, and they're having the same conversation, like I mentioned, that I was having 3 years ago. Hey guys, how should we think about this? Where can we play in this space? Should we bank crypto companies? Should we lean into and add crypto checkout to our card acquiring stack? Because many of them are large, merchant acquirers. So I think there's a lot of exploratory conversations going on. I think it will take a couple of months to hone in on a specific use case. But that being said, they're very forward-thinking banks in crypto. I mean, look at BBVA, they're doing tokenized deposits, custody, trading. Look at Stan Chart, they've been doing stuff for a while in stablecoins. I think what's happened is they've been in very closed and small sandboxes. And now it's allowed them to go a bit more, be more ambitious with their stablecoin plans. Go, hey, actually, we can lean into this a bit more. The OCC in the US has allowed US banks to start, interacting, holding stablecoins on balance sheet, banking crypto companies. And I think, it starts like that. And once they, latch onto a use case that they're willing to enable, I think we're going to start seeing, a couple of bank level announcements come out in the next, 6 to 12 months on multiple different use cases. But I do think there's definitely two pathways. One is, hey, let's go to our core business around, at least the core investment type banking business. Let's call it like trading, custody, these sorts of things. And there's a few players playing in that space, liquidity, and more to that. And then you're seeing the payments guys starting to lean in specifically to stablecoin. How do we move money between our two branches more efficiently, cross border? How do we, especially for a smaller regional bank who doesn't have a huge correspondent banking network like a Citibank or something, who doesn't need a stablecoin, they built this, this correspondent banking network out. So I think a lot of use cases are going to pop up and a lot of announcements are going to be made in the next 6 to 12 months. They're probably smaller POCs, but again, the momentum is there. The cogs are moving.
Yeah. We are
So
still
yeah,
very
so
early anyway,
exactly.
so we are still waiting for that. I wanted to deep dive on another argument that is very, very, let's say, recent under that point of view. So obviously, stablecoin is one of the huge trends that we have in the industry. The other one, in my opinion, at the same level of importance, let's say, is obviously AI. And I wanted to ask your take more internally in the company itself. So, are you using AI right now in your internal processes, and how are you using that if you do?
No, we are, deep down the deep down the AI rabbit hole. My
Mm,
co-founder and our CTO, Donald, he's spearheading everything. He leads the product and
mm,
tech teams. He's spearheading, I guess he's our AI advocate directly from the top. And, we've got a couple of AI evangelists in the company across the product and
mm,
engineering org. And it's various use case from using Cursor to help them code to debugging,
mm,
using AI to debug to everyone in the company is using some version of Gemini or ChatGPT to do deep research and strategy docs and
mhm,
that sort of thing. So to the kind of day-to-day efficiency gains. But I think specifically how we've embedded AI into our product, which has been super exciting for us. We obviously a heavily regulated payments business.
mhm,
Onboarding and KYC has perennially been an issue for many customers over the years. So we've embedded AI agents into our onboarding to replace manual reviews of documentation, querying
mm,
databases around the world to pull company information, um, just dumping a bunch of documentation into into a chatbot and it picking up and structuring that data into the workflow. So no one has to go in and fill in,
mm.
um, you know, workflow
And
documentation anymore and
you're
that sort of
doing
thing.
that internally. I mean, you don't use a third party to do that. You actually have your own agents that do that.
No, so we've used a couple of external AI tools
Mm,
to build our own kind of internal AI agents, but specifically
mhm,
for specific flows. Um, but yeah, so there we've seen massive efficiency gains. We've brought onboarding numbers down significantly. We've brought reviews down significantly, and I think that was a space that many, you just run through the roster. Many payment
mm,
companies are using AI there because it's a structured workflow that's generally not as efficient as it could be,
mm.
and now you have an army of AI agents looking at different things, querying different databases around the world instantly, and
Yeah.
and spitting out structured data and taking in unstructured data.
It has always been one of the major, conversion killer in the industry, the KYC and
Yeah,
the KYB. So it's kind of a no-brainer
yeah.
under that point of view. And you're also working on agents in payments, like for example, having a specific agents that is able to perform payments on behalf of the customer itself, because I think that is one of the most interesting trends going on right now.
I think, yeah, I mean, as we mentioned, the two hottest trends at the moment are AI and stablecoins. And when you combine AI and
So
stablecoins in agentic commerce,
makes
it's
sense
like
to put them together.
exactly. Look, we've definitely looking at a couple of use cases with some of these
Mm,
agentic commerce companies. Obviously, we provide. My view is that if you have for lack of a better term, an internet native being that can transact and do
mm,
these things, i.e., the AI agents, whether he's deployed by an individual or a business, there's elements of KYB or KYA, know your agent, or KYC attached to those agents. And there's some elements there that we're
mm,
thinking through. But secondly, you've got this internet native being that's able to interact. You need to be able to give him guardrails, and he needs to be able to use
mm,
internet native money. The best way to do that is to, in my view, to give these guys access to a stablecoin wallet, put some
mm,
guardrails on where they can, how they can spend, limits they can spend, where they can spend, i.e., specific merchants, and then allow them to go and spend in stablecoin using stablecoins. So early days there. We're thinking through a lot of those things. A lot of them are, I guess, what you say, like design phase and what the best way to do this is. How do you spin up these wallets for the agents? How do you provide the right permissioning and guardrails for them to interact outside, so you don't unleash a rogue AI agent and he goes and spends all your money, basically.
yeah, that would be amazing for them mostly. But yeah, no, it's a very very interesting point because we've been talking a lot about how to use AI to enhance efficiency and everything. And obviously there is one very obvious trend that is actually cutting costs related to human labor using AI to, make everything more lean, basically. But at the same time, I think that the most interesting trend using AI is actually to provide more value to the operation that you already have. You basically have an unlimited amount of resources, an unlimited amount of small agents doing a lot of things that you can actually use to provide more value to your customer and to your employees also. So I think that the second trend is most interesting, the most interesting one. Yeah, let's say as a final question from my side, you have a lot of experience in this field, both in finance and stablecoin and crypto. I wanted to ask your advice to, let's say, some young founders that are, entering this market right now. They want to build something in the stablecoin or in the crypto ecosystem. What would be your advice to them as, as someone that actually built something quite huge in this industry?
I mean, it's always an interesting one. I do some angel investing and, across the space, most of them are stablecoin adjacent or in the stablecoin space. So I definitely chat to some earlier stage founders and that sort of thing. I mean, I think the number one thing is to kind of like hone in on the use case and get to product market fits as quick as you can. That's, when a customer is, a repeat customer is using your product or you're solving a real problem for them, I think is really where the focus should be right off the bat. There's a lot of use cases masquerading today at, but really what is the underlying problem that it solves? And then specifically, are you solving those customers? And the way you measure that is repeat customers, new customers, signups, this sort of thing. So I think it's be relentlessly focused early on getting to product market fit and identifying the niche. There's a lot of things you could do, but find that one thing that you're the best in the world at and have the right to win at. Go build that and and double down on that as you start seeing early signs of product market fit.
Very interesting. Chris, it has been a pleasure to speak with you. It was a very, very interesting conversation, and I'm looking forward to see your name and your company name on the headline very, very, very soon. So thanks again for joining me.
Thanks for having me, Michaela. It's been great to chat.
It was a pleasure. Bye. Thank you very much.
Ciao.